Meta, the parent company of Instagram, WhatsApp, and Facebook, has been making significant strides in augmented reality and wearable technology. One of the most notable ventures in this space is the Meta Ray-Ban smart glasses developed in partnership with Ray-Ban's parent company, EssilorLuxottica. These smart glasses are part of Meta's broader vision for augmented reality and wearable technology, blending technology with the classic Ray-Ban style. In this video, we'll break down the potential financial impact of these Ray-Ban smart glasses, and I'll go into how this impacts my consideration around investing in Meta. If you enjoy this video, don't forget to leave a like and subscribe. A bit of background around these smart glasses before we get started. First introduced as Ray-Ban Stories in 2021, Meta's smart glasses aim to provide users with hands-free access to cameras, audio, and social media integration. The latest iteration of these glasses, the Meta Ray-Ban smart glasses in 2023, enhances the capabilities with improved cameras, longer battery life, and AI-powered features. These updates position Meta as a key player in the growing AR and wearable technology market, competing with other technology companies in the industry like Apple, Amazon, Google, and Snapchat. For investors, this product line highlights Meta's push to diversify revenue streams beyond advertising, tapping into hardware, AI, and augmented reality. As the adoption of smart glasses increases, this could have long-term implications for Meta's market position, stock valuation, and Meta's role in shaping the future of AR and spatial computing. By partnering with EssilorLuxottica to make these smart glasses, Meta gains access to a vast global retail network, including flagship stores like Sunglass Hut and LensCrafters, which has decades of experience in selling high-quality eyewear. This strategic distribution advantage enables Meta to rapidly scale sales and reach a broader audience, while reinforcing the credibility and design appeal of its smart glasses. Last year, the two companies extended their partnership well beyond 2030, underscoring their long-term commitment to this product line. Recent reports also indicate that Meta is in talks to acquire a 5% stake in EssilorLuxottica. This potential investment would aid in further cementing the strategic partnership and ensuring that both companies' interests remain aligned. Now let's do a quick review of Meta's fundamentals. To analyze Meta's fundamentals, I'll be using my investment analysis platform. The link is in the description if you want to try it out for free and follow along. We can see here that the company has made around $164 billion of revenue in 2024. Meta mainly generates their revenue from advertising, with advertising making up over 97% of Meta's revenue. Meta is growing their hardware product sales, which is included in the Reality Lab segment, but this is still a small portion of Meta's overall sales. Meta has grown total revenue at a compound annual growth rate of around 20% over a 10-year period, with revenue generally growing above 20% annually. The company has strong margins and returns on capital and has been growing these metrics over the last few years. The revenue growth and strong improving margins have contributed towards robust earnings and free cash flow per share growth, increasing these ratios at a compound annual growth rate of around 20% over the last 5 to 10 years. Overall, these figures are indicating some strong fundamental performance for Meta. The share price has grown 240% in the last 5 years and 770% over the last 10 years. That's a compound annual growth rate of around 25% over these periods. The company is trading at a price to earnings ratio of around 24 times and a price to free cash flow of around 27 times. These ratios are at the lower end of their historic ranges, so not looking overvalued when compared to their historic ratios, and indicating that growth in price is not due to a multiple expansion, but rather due to growth in the underlying earnings and free cash flow of the company. Comparing the price ratios to a benchmark like the S&P 500, we can see that the S&P 500 is trading at a price ratio of around 26 times. So Meta is comparatively cheaper than the S&P 500, with Meta trading at a price to earnings ratio of around 24 times. I personally hold Meta as one of my larger investments. I've invested over $9,000 into Meta, with Meta being my third largest position, making up around 10% of my portfolio. I am also looking to buy more Meta stock when opportunities arise. Now let's analyze the potential profit impact from Meta's Ray-Ban smart glasses. Although Meta hasn't disclosed detailed cost or profit figures, we can infer some metrics from financial reports and industry estimates. The Reality Lab segment, which includes both MetaQuest devices and smart glasses, generated around $2 billion in revenue in 2024, an increase of 13% from 2023's revenue. Looking at the profit and losses of each segment, we can see that the Reality Lab segment made losses of almost $18 billion in 2024, a 10% increase from 2023. These losses have reduced the overall profitability of the business by 25% from $87 billion to $69 billion. Now, it isn't unusual for a company to make losses on new products for a couple of years. Even Google took 15 years to reach profitability on its Google Cloud segment. Over time, increased sales volumes and improvements in manufacturing efficiencies are expected to bridge the gap between fixed costs and variable profits. If Meta were able to eliminate the $18 billion loss from Reality Labs through improved sales and cost efficiencies, its overall earnings could increase by approximately 25%, which would effectively reduce today's price-to-earnings ratio to around 19 times. This scenario relies on Meta's ability to ramp up sales volumes, leveraging both Meta's advertising channels sales and EssilorLuxottica's strong distribution network. Now let's see how many of its current smart glasses Meta would need to sell in order to cover the losses from the entire Reality Labs segment. Here we have some estimates from Counterpoint Research suggesting that the production cost of the base edition of the Meta Ray-Ban glasses, priced at around $299, is nearly $135, implying a gross profit of roughly $164 per unit. On a side note, you'll see that Qualcomm AR1 chips make up over a third of the cost of a pair of glasses. If you're a Qualcomm investor, you'll benefit from increased demand for these chips. Now, there is no publicly available information on the revenue or profit split between Meta and EssilorLuxottica. Assuming a 50-50 split between the companies, Meta's revenue per unit would be roughly $150, with a gross profit margin of about $82 per pair. Meta has already sold over 2 million smart glasses within the last 18 months, and EssilorLuxottica is expanding its production capacity with the expectation of increasing production to 10 million units annually by the end of 2026. So we could see Meta's revenue from these glasses reach $1.5 billion next year and potentially contribute just under $1 billion to reducing the loss from the Reality Labs segment. Now, revenue of $1.5 billion is less than 1% of Meta's total revenue of $164 billion, so this is not going to have a major impact on the stock in the short term. To fully offset the losses from Reality Labs, Meta would need to sell in excess of 200 million units, assuming all other variables remain constant. This simplified scenario assumes that the entire loss reduction is solely achieved through the sale of the lower-cost base model smart glasses, that there are no improvements in margins over time, that sales from Meta Quest devices or other Reality Lab products do not contribute to the further offsetting of these losses, and that expenses within Reality Labs remain flat, even though they're likely to grow. During the most recent earnings call, Mark Zuckerberg highlighted that this year will be a defining period for determining whether Meta can scale production to hundreds of millions and even billions of AI-enabled glasses. Now, whether Meta will sell hundreds of millions of these glasses is hard to say. Users may find that the current version of the smart glasses with integrated cameras, open-ear speakers, and built-in AI offer good value. For instance, a standard pair of Wayfarer sunglasses retails for about $195, whereas Meta's smart glasses, which also function as earphones and a basic action camera, add a small premium of roughly $100. If I want to buy a pair of earphones, AirPod Pro 2s retail for $249, just $50 less than the Meta smart glasses. And if I want to buy an action camera, a GoPro Hero retails for $179. If I were to buy a pair of normal Ray-Bans, AirPod Pro 2s, and a GoPro Hero, they would cost upwards of $600, which is more than twice the cost of the base Meta Ray-Ban smart glasses. That being said, iPhone sales in 2024 were 232 million units, with over 1.2 billion phones sold globally across all companies. So if Mark wants these Meta glasses to sell as many units as a smartphone, the features and convenience of using smart glasses will need to be better than a smartphone in order to have a value proposition where users see value in getting a pair of smart glasses on top of or instead of a smartphone. Over time, competition from other tech companies like Google, Amazon, and Apple will increase as they also develop advanced wearable technologies. Meta has been investing in a new generation of augmented reality glasses referred to as Project Orion, which has already benefited from significant R&D investments. Not long ago, the hardware for AR glasses required cumbersome rigs with backpacks and fans. Now, with a more compact design and even the development of the EMG wristband as an input device, the form factor has dramatically improved, and the prototype is already looking impressive. Reports indicate that these glasses may be ready by 2027. Additional R&D will be essential to further reduce size, add features, and achieve manufacturing efficiencies to drive a lower cost per unit ahead of a release. At this stage, my investment thesis for Meta is predominantly centered on its robust advertising business. However, I'm optimistic about the long-term potential of Meta's venture into hardware, particularly smart and AR glasses. Meta has slowed the rate at which losses from Reality Labs has been increasing over the last few years. I would like to see the impact of these losses decrease over the next 2 or 3 years and would like this segment to move towards profitability over the next 5 to 10 years. If profits from Meta's core apps continue to grow at rates above 20% annually and Reality Labs losses stabilize or decline, overall earnings and free cash flow should accelerate. In that scenario, either the share price will rise in line with the improved fundamentals, or if price remains steady, lower valuation multiples will make Meta an even more attractive investment. In the long run, I am optimistic about the smart and AR glasses product line, but it's all dependent on Meta reaching sales at scale and improving the margins of these products over time. I like the form factor of these glasses. The integration of cameras, earphones, AI, and augmented reality into a single device enhances user convenience compared to managing multiple devices. The Ray-Ban aesthetic is also more appealing than some of the other smart glasses styles that we've seen in the past, and we should see the catalog of styles increase over time. Meta is exceptionally well positioned in the AR glasses space. Meta is able to fund the development of these glasses by leveraging its existing advertising business, while its expertise in smart glasses and mixed reality headsets can be leveraged to enhance its AR devices. Additionally, Meta can leverage its extensive platforms for advertising and benefits from a strategic partnership with EssilorLuxottica, which enhances its distribution network. These glasses also have the potential to drive synergies across Meta's ecosystem, making it easier for users to capture content for platforms like Instagram and improving interactions with Meta's AI, though sales of these glasses may eventually diminish sales of mixed and virtual reality headsets. In summary, Meta is a company that I already have in my investment portfolio. I think Meta has strong fundamentals and an attractive growth profile. While my investment thesis doesn't rely on Meta's smarter AR glasses, I am optimistic about this product line long term and will be monitoring growth in the sales of these glasses. At Meta's current price ratio, it is at the lower end of its historic multiples and comparatively cheaper than a benchmark like the S&P 500. Based on all this, I'm looking to add more to this position as opportunities arise. I'd love to hear what your thoughts are on Meta as a stock. Leave a comment if you're invested in Meta or if you've tried out the Meta Ray-Ban smart glasses. If you found this video helpful, hit that like button and subscribe for more stock investing news and insights. I have added some links to videos reviewing Meta's Ray-Ban smart glasses and Orion augmented reality glasses in the description of this video. If you're interested in seeing more of their features and functionalities, check those out. That's it for this video. Thanks for watching. I'll see you in the next one.